everyone, welcome back to our channel Fintoo and you're watching Friday First Cut series. I am Nidhi Manchanda, Certified Financial Planner and Head of Training, Research and Development at Fintoo. Interest rates are rising in line with RBI policy rate, and now currently RBI has already increased the repo rate by 190 basis point since May this year, and it has already started impacting the borrowers in terms of high interest cost. So in today's video, we'll be discussing how much this impact is and how you can reduce this impact of interest cost. So stay tuned to understand the impact of rising interest rates on your loans. A crucial point to note here is that many people are of the view that these rising interest rates are not impacting them just because their EMI is not increasing. So if you are also under the same impression that the interest cost is not affecting you, then stay tuned as we'll be discussing this with the help of an example that how much impact will it have on your loans. So let's say you have a loan of 50 lakh rupees and the loan tenure is 20 years. Interest on this loan is 7% per annum. So EMI will come to around 38,765. And in this scenario, if you calculate the total interest that you will be paying in the entire 20 years time period would be 43 lakhs 3,000 approximately. So this is your interest cost. But now because interest rates are rising, it will impact your interest cost definitely. But when it comes to rising the interest cost, banks usually do not increase your EMI. Instead, they will increase your loan tenure. And just because it's not affecting your cash flow, because your EMI remains the same, you get an impression that it is not affecting your interest cost as a whole. So what you need to do is you need to check with your bank or lending institution to understand that if your EMI is not increased, how long your tenure being increased. Continuing with the same example, so let's say your interest rate is risen from 7% to 8.5% and your EMI remains constant. In that case, your tenure might have increased, and in this example that we just discussed, your tenure will be increased by close to 9 more years. 9 more years means more EMI that will be paying, adding to huge interest cost. So in this case, your total interest outgo will be approximately 84.5 lakhs. Now this is a huge interest cost that is added. So instead of earlier, you will be paying around 43 lakhs of your interest. With the rise in interest rates, you will end up paying around 84.5 lakhs of interest because your EMI remains the same. So we can say approximately 41 lakhs more you would be paying because of the increase in the tenure. So what should you do in order to save this interest cost? Well, if your cash flow permits, you should definitely increase your EMI by making your loan tenure remain the same. In this case or in the example that we have just discussed, if you increase your EMI will be increased by approximately 4 to 5,000, keeping your loan tenure intact there itself. In this case, you will be paying a higher interest rates compared to your original scenario, which is 54 lakhs 13,000 approximately. But if you compare this scenario with the other one where your loan tenure has been increased, you will be paying much lesser of your interest cost. So by just telling your bank or the financial institution that instead of increasing the tenure, increase my EMI, you will be saving a lot of interest cost, which is 30.36 lakhs. So that's a huge amount that you can save by just taking one decision. So in order to save your interest cost, the first thing that you should be doing is increasing your EMI and not the tenure. But apart from this, there are a couple more things that you can do to save your interest cost. The second one could be that checking with your banks and financial institutions and what are the interest rates that they are offering. And if your CIBIL score is good, try to negotiate to reduce your interest cost. And in case your CIBIL score is actually good, you will be able to successfully negotiate or you can actually refinance to a better interest offers. We have already made a detailed video on CIBIL score and how you can actually improve it, so you may check that out. The third thing that you can do to reduce your interest cost is to do part repayments of your loans. Now how you will do this? Let's understand this with the help of an example. So let's take an example of a 50 lakh loan which is of 25 years and interest rate of 8.5%. Here your monthly EMI would approximately come to around 40,000 and the total interest paid in these 25 years would be 71 lakhs. That's an original scenario. Now how to start prepaying it? The first thing that you need to do is pay an extra EMI every year. This will definitely help you to save your interest cost by as much as 17 lakhs rupees. Second thing that you need to do here is that as and when your income is increasing, make sure you're increasing your EMIs as well. So if you increase your EMIs by let's say 5% every year, then you will be able to save an interest cost of 32 lakhs. When increasing your EMI seems difficult, another thing that you can do is whenever you receive any bonus, you can use that to prepay your home loans. Now currently we are into this Diwali season and if you are expecting any Diwali bonus to receive, you can very well use this Diwali bonus to prepay your home loans or a part of it. So let's say in this example that we are discussing, if you plan to prepay your home loans by 1 lakh rupees every year, then you'll be able to close your loan in 16 years instead of 25 years. That is 9 years early, and you will also be saving an interest cost of around 30 lakhs. So these are some of the strategies that you can use to reduce your home loan burden and get out of the debt trap as early as possible. So I hope this video was useful for you. In case you have any further queries or questions, feel free to get in touch with our finance experts. And on behalf of the entire team of Fintoo, I wish you all a very happy Diwali. And for more such insightful videos, do subscribe to our channel.